Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording here on Friday, June 14th, a couple hours before the close. And on today's show, we're going to talk about why it's good to be extra diligent in this time frame because things are not quite as they seem in the markets and the charts and what you're looking at. And we're going to try and dive deep and uncover the mystery, a little bit of the mystery that's going on in the market. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How we doing, Barry?
Doing good, doing good.
Do you have your like Sherlock Holmes hat on and your magnifying glass?
Man, all week. All week.
It's because as I said in the opening, you'd think making new highs, markets are ripping, bonds are rallying, that it would be like, woohoo, let's put our, party hats on and run. But
Hmm.
think things are just not as they seem. And I want you to talk about your, obviously the technicals, but also what the years of experience that you and I have and what sort of the spidey sense that's going off for you right now.
Hmm. Yeah, let's do that.
So let's jump in. There's the ES up and out. That's a breakout. Yep.
Yep. And it's not like we didn't see it coming. We've been watching these levels really carefully. We talked about 5,200 when we held that one by one at the
Yep.
5,200 level. And then we talked about holding above the 144, which we did nicely last week. And well, when you hold above a level, this is what happens. Eventually you start moving higher.
Hmm.
And this 140 level really had us for a while. I have to say that.
I mean, since March, April, if you look at where it first encountered it.
Yeah, and it encountered it and we had a decent reaction. So, it's something to watch and see what happens. And actually, even to break out of it, we had to dip below, a little catapult out of it.
Hmm.
And so we did. Well, I've had this next level 55, 66 up in there for a few weeks in case we get up in there. And that looks like the next level that we're going to go up and test. But
Hmm.
boy, the spidey sense thing, I'm just, sometimes you're comfortable with the market's doing and everything looks just fine. And, everything's clicking along and there's nothing suspicious. It's like driving on a dark road, unknown,
Right,
not
right. In the
familiar with.
mountains.
Yeah. And normally you go, oh, this all looks normal. It's dark, but, all of a sudden something's not right. But you're not quite able to place that. So that's kind of
Hmm.
feel I'm getting. Because if you look at the volumes, buy volumes versus sell volumes, they're completely off. There's a lot of selling going on, and it's not the kind of volume that would follow some kind of a move up.
Yeah,
But this
yeah. I mean,
hasn't been what's that?
I was going to say, and the breadth figures are showing exactly what you're saying. It's a small number of stocks that are pushing these indices.
And it's been like that, right, for a while, and you
Right.
wonder how long it can go on. But one of the things that I always lean back on is you always have to lean back on your technicals. That's
Hmm.
why you have it. So we don't have to, because the mind, we always talk about in our segment sometimes, our last shop talk segment, it's about the mind, right? So sometimes you might feel this and feel that and feel a little bit uncomfortable, feel like something's not right. Well, technicals were always there.
Right.
And because we were leaning on the technicals, we were watching these levels, having it clear, be hold above and all of that. Even with all these timing cycles that we had clicking through, the levels held,
We
right?
weren't shorting.
No, we weren't, not quite.
That's the key.
Uh, so that's the thing, it's price and time for sure, but price definitely helps you have a grip on time, you know.
Hmm.
So when that's lined up, because if it was purely time, we'd be in trouble by now.
Yeah.
But then there are times when, price and time comes together, like here, it was just fine. So all that being said, let's get into what to look for next week.
Hmm.
Well, I think the only thing to look for is it's either 55, 66 or bust, right?
Right.
And
Or
it
if you lose
just,
the 144 again, that's it.
yeah, down here, right?
Yeah.
But it just feels like we just have to go up and tap this 55, 66 level, maybe a little above, have a little zone up there, up
Hmm.
until 55. Well, up until 56. So it's a kind of a big zone, 30-point zone. But that
Hmm.
seems like the zone we're heading into. And if you notice these one by ones, man, after we correct, after every correction, we had a correction here, held the one
Hmm.
by one, correction, held the one by one.
Sure.
So I feel like, until we get the next correction, this is going to be in very, it's in a very strong market, very, very strong
Sure.
in the sense of the ascension, right? Look at the angle we're climbing up of. So that's the degree we're climbing.
Which is steep, but bullish.
It's steep and bullish. Yeah,
That's right.
you
As long as
know,
it holds it.
only thing, yeah, that's kind of what's happening. And so let's take a look at the other charts and see why I'm a little bit suspicious in some ways.
Sure.
Let's take a look at the Dow, which we've been following. And you can see, the Dow is not all that excited about all this.
No,
It
it's
is
not.
not at all, right?
No.
It's like the Dow didn't get
It looks like it's distributing totally.
through this period, yes.
Yeah.
And still holding a trend line, but I don't really see the enthusiasm here. So let's see what happens. But I think if we take out like Thursday low, for example, because of just the way it is consolidating, that could give us a hint, because that would also mean that we're breaking this trend line. That's one. I think this 330 level is something to watch. It's pretty much close to the low here.
And of course, the 144 is critical.
144, yeah, that's a big one. If you're going to get a little tiny correction versus, some kind of a long-term one, the 378, 78 level would be the one to be taken out. Yeah, that would set things in motion. That's for sure.
Sure.
This is, let me see here. The circle that you see, I was messing around with another chart and I saw the circle, connect. And if you can get 3 points, basically, it's good to go. And I was looking at the 240 by 180 and I'm seeing the curve. And, these, when we break these circles, get these huge corrections.
Massive moves.
And, but it's not that often that you can get a decent curve running. So this looks pretty good. And the reason I say it's pretty good is you can see as the curve is starting to steepen, the market is also starting to steepen a little bit. It's following that. So I look for that. So when that's happening, you kind of want to keep it on the charts and see what happens. And so we'll see. I mean, sometimes they accelerate very strongly. Not always. Sometimes they might go sideways and exit the circle.
The accelerations are when you get your blow off top.
So one way to watch that is to look at the last swing. You go from the last swing low and you measure the squares and see if you're squaring out anytime soon. And if you were to do that, we can put for example, so we could put the square on the April low, and we're running about, this is a 60 square.
Almost a 60, yep.
Almost a 16 time. Not always terminating at 60s, but boy, it's 2/3 of a 90, so it's something important to watch. Anyway, we'll watch it. Not much, just to say that, look, there's a potential to take off here just as easily, right? And here's our cash S&P chart. And this is where the 144, we first looked at it. That's where we got the low. We found the support, started moving higher. And because of all the cycles that were here, we were looking for a lower high, perhaps, and a continuation. But we managed to get above the 144. That, gave us the first sign to be cautious, not be too quick on the draw. And that corrected a little bit. And here we go. We kind of slingshot right through the 144. And again, looking at this cash chart, really the next resistance point is like 55, 56. So there it is. That's a 50% level. And it might be past that, but this is a great example, real time, of looking at things, and you're kind of hearing in the background, the economics and the geopolitical stuff, the political stuff. And you hear about the market breadth and all of these things, and you can't trade those things. So,
no. As a matter of fact, they'll almost always misdirect you.
Always, exactly. So, and if you guys have been watching us through, even for weeks, this is how we take it step by step. We always lean back on the mechanics, no matter what's happening out there. And at this point, we're sitting basically on top of a quarter square, the cash chart, and we're just another quarter, which is away from the 55, 56. So we look at that. Unless something drastic happens, sort of a completely unexpected thing, that looks like the next level of support. We'll see what happens with the Dow. We'll see if it picks up, catch up quickly or not. We talked about that chart. Yeah, I saw it 55, 56 on the E-mini. We'll leave it at that and have these steep lines drawn in. So we know, and far as trend goes, long as we're above the 1 by 1, what are you going to do? You know,
You got to go with it.
you just trade it. Yeah, you just go with it.
Yep.
And here's a good example of, well, I can show it another chart. I was going to say a good example of inside bar getting taken out, but we did also jump the contract. But I think there was another, wasn't
Well, I'm
there?
sure we'll find it on the different
Yeah,
charts
it
we
was
look
somewhere. I'll
at.
find it for you later. Moving on to the weekly chart. Well, this was a big sticky point for me, honestly, because the weekly,
Mhm.
we got stuck at this 288, which is coming from, way back in the days. And I really wanted to see how we're going to settle. And we clearly settled above.
Yep.
So,
Yep. This
so
week.
we're not, yeah, we're not going to argue with that. And let's just continue to watch the direction. And we know the levels to watch. So let's continue to do that. Not much to add when you break a huge level like this.
Hmm.
And if you guys haven't seen it, the reason we're talking about it is from the 2009 low. So
Very important.
this is square 288, and you can see what happened right at the 144 level back in 2018, 19. Now we tapped around there.
For 3 or 4 years bouncing around.
Mm-hmm, mm-hmm. And even then, we didn't really get a strong break, right? It was really kind of little baby step kind of moves. Now
Mhm.
here, we really, sure, the contract change probably helped, but still, nonetheless, we're 45.93, so that's well above our 288. It's in good
Mhm.
shape. We didn't take a look at the 30-minute, did we?
No, we can look at that for the shorter term.
Mm-hmm. So here's the 30-minute. Unfortunately, I set it up for the September contract, so we don't have the trades from last week.
Hmm.
But at least for today, well, we have we're going with the square of 90. I set it up at the high today. 50% of the square was really the support area, and we really had to hold that. And resistance was at 54.95. And basically we've been between those 2 points so far. We'll see how we go into the close, but there we are. One of the interesting things was this little really near perfect channel that's happening. And I think this is, for the shorter time frame anyway, this is going to be something we'll be watching next week to see how this lower channel holds up.
Hmm.
So yeah, that's it for that. Let's move on to bonds.
Which had a nice move this week.
We had a really good move. So, and we kind of called that last week, 50% is
Hmm.
support. We held it and we had the ABCD. We thought that covered it, but nope, we went right up into it, made a little buy. So
Yeah.
this sort of completes that. I think we can call that a move and take out the AB. Well, we'll leave it in there.
Yeah. Because
So
it's
from
got to make a decision now, right?
yes. So I think the reversal of the high bar here will be really important next couple of days.
Hmm.
But long as we're above, 19 and a half or so, look, we can go up and test this. Why not a double top, right? Why
Hmm.
not go up and test 124? But let's see. I mean, we roughly got into the resistance area. We're starting to move through it. And we're just watching for now. And this has been the correction. Here's the trend is down clearly, right?
Hmm.
And now we're correcting. So that correction, it's a good bet to look for that first ABCD to see if that can finish it up. And if it doesn't, we'll wait and see. That's all we can do at this point.
Right.
But the overall trend is still, to the downside. Anything you want to add to that?
No, I think that's right. I'm curious to see if the ABCD completion turns it down or if we, continue on up as you said and see if we do a double top there at the next level.
Well, we have this other potential, that little ABCD that could go in.
Hmm.
So we'll see. Yeah, long as we're above 19 and a half, I think, we can look for more upside. The key is to see if we get reversal in here at this point. The first time you get reversal, I would definitely, that's a yellow light. Let's look at the weekly bonds. There's our down trend line, and here's our triangle. Looks like we tapped the bottom 2 weeks ago. Now we're back at the top. We're starting to break out. So, the next resistance is really like 22, 23 level. So 123 would be the next resistance far as the weekly goes. And if that happens, I'm wondering, maybe we did square out here in a big way,
Hmm.
which we've been talking about, but I've been a little bit leery about, is that really, is that really it? But even weekly wise, there's
There's a big ABCD there
exactly. So I wouldn't be, and that would really be a setup.
up into 130. I think it takes us
Is it,
130 something.
well, there you go. Goes right to the 50%
Mm-hmm.
of that bigger square. I mean, that would be perfect. And if we can hold above the levels that we talked about on the daily, and we can watch it, we can watch how it goes. I mean, this is a potential. It's a kind of long shot,
Mm-hmm.
maybe. But let's see. I'd like to see a little bit more price action on the daily before I sort of go all in on this on the bonds.
Yeah, and
We'll
the
still,
monthly, also on the monthly for bonds, we had our first up bar since November.
yeah. So we need to kind of watch that.
Yeah, we have to see.
It doesn't seem like a new trend to me, but let's see what the technicals say. But
Mm-hmm.
this triangle break into the upside is something to watch. If it does normally, you break to the upside, it'll come back and recheck this line or
Mm-hmm.
sort of check the breakout. So we'll wait to see if those things happen. But now we definitely have it breaking out in a sort of a convincing way.
Mm-hmm.
Next, we have crude
Which is looking good.
looking good. The 73.50 held. That's the first thing.
Mm-hmm.
And so that's solid. That whole pattern here, we came back to test that really solid, broke to the upside above the downtrend line. So it just looks like 83 is the next place to go. So,
Yep.
but the big thing now is, can we get above 83 and move higher or not?
Mm-hmm.
But it's possible that we get trapped between 83 and 73 in here for a while. And right now we're smack in the middle of the whole thing. So not much to
Mm-hmm.
do. But I think long as 73 held upside, like we said last week, upside is really the place to trade.
Yep. I'll cover that a little bit, looking at the
Okay.
monthly, weekly.
Good. And the weekly crude, we talked about it last week. We saw the box, and this was the trading range that I marked out, and looks like we're going to hold within it since we reversed this week.
This week we had an up bar. Yep.
The bracket is okay. 50% would be around 81, 80, yeah, 81.50. And we'll see. Long as we're below that weekly basis, long as we're below 81.50, I think it's still on sort of weaker legs than stronger, right? If we can get above that, clearly you can see we're kind of breaking the triangle to the upside too, and that sets up something. But no matter what happens, this triangle, that was a tight triangle. Let's say not much. It's kind of like yawn.
But it's a beautiful bullish consolidation if you look at the big picture.
Yeah, it's very bullish. We're holding well above the 50% of the square. So yeah, it's bullish. The consolidation looks good. It looks tight, looks good. And this kind of a tight move, neither triangle, if we can break out to the upside, it'll be very good.
Mm-hmm.
But obviously it doesn't look like it's finished yet. So we'll
No.
let it finish up.
Yep. Still chopping around.
And looking at the weekly gold, same thing. I mean, this is the area and the daily that's really holding tight. And the highs were right at the 270 degrees that we check out every week to say, all this, I mean, really the big support is down below, let's say 2050 and 2100. And that being the case, the fact that we're holding these lows, above 2300 is really, really bullish.
Yes,
it's almost as if it's just ready to pounce higher,
right? Right.
So I think that's something to keep in mind, and also the steepness of the line angle of how we're getting up there.
Mm-hmm.
They're very steep.
Let it finish up.
Yep. Let's go take a look at copper, which is also
doing the same thing similarly.
Same thing. And sort of holding, it's not quite, it doesn't look like the low is in yet for the correction. So we'll continue to watch that. Looks like this quarter line seems like, I mean, that should be the attractor,
Right.
And it's about 430, 432. And not just the level from the square, but also we have these old highs sitting up about the same level. So it's correcting. Yeah, we'll watch and wait and see for now. That's the other kind of suspicious thing. Like a lot of these things are in correction mode. It's just the S&P running on its own.
And I can attest to that from commodity land. They're all correcting
Mhm.
and basing and triangulating and doing things that are consolidations. They're
Mhm.
not running.
Anything but trending.
That's right. That's right.
So, well, here's the weekly copper, went up into 260 by 216. It was very close.
Hmm.
And since this is yeah, I was gonna say this is a rolling contract. So it's possible if we lower the square that we did square out 260 by
Hmm.
216.
Hmm.
And if that's the case, let it, you might have a little bit longer to go, being that it's weekly. And we saw that 216 cycle. So if this 216 is also hitting, we can expect it to, at a minimum get down into 420,
Hmm.
right? So and below 476. I mean, clearly it's a little bit weak because it's below the 50% of the square. Moving on to the dollar, did pretty well, worked out. We had this support level drawn up, we held it there, ran up, had a 1 day sort of a kind of a flushing, a
It looks
little
like
bit
it,
like a
doesn't it?
flush, right?
Hmm.
Reversal, pull back and then inside bar and took out the highs today and boom, here we are.
Hmm.
And it's still, it's not out of the woods yet. I mean, for it to really run, get back in the trending mode, I think getting about 106 would be great. But holding about this 105 level is okay. It's at least it's not 104.
And look at the higher lows since last July, August.
Yeah, yeah.
Just continues to put them in.
Mm-hmm. Yeah, the trend is definitely to the upside. Is very tight, which means, this could run just a drop of a hat. So we'll
Hmm.
just watch it. So far, it's been very bullish and it's holding at the right places. Yeah, we'll keep it at that. Let's go to the weekly really quick. So here's the deal with the weekly. We held the 1/3 line, which is the green dotted line right there of the square. And so that's 120 degrees up. And it's consolidating, right below, but above the 1/3, above the 1/3 of the square
Hmm.
and below the half. So between those two. And that consolidation is okay. If it's 1/3 is holding, that's great. We did do 90 from the high coming up into next week. So we'll have to see if we go up into the 50% and we tap that at the 90 high to high, that could line up becoming some kind of a turn. But in the meantime, looks like it's just kind of drifting higher.
Hmm.
And the ABCD correction seems to be finished, mainly because that support on the daily held. So that's like the first clue.
Hmm.
And we'll see what happens here. But because the support held, we're just gonna stay with the long side on this support line right there,
Hmm.
104. Moving on to the euro. Well, 108 has been our key. And
You can see why now.
yeah, very clear, It's
Yeah.
funny how it like gaps below and spikes above. Everything's right along the 108 line. And so we gap down. Here's a retest, couldn't hold. We sold off 2 days and it looks good. And we also broke this little equilibrium line. And that's not a good sign for if you're bullish. I'll take this out for now. So it looks like we're on the down, but the other side of the 108, support is around 106, which is where we had the other lows come and stop. It's the same square. So we're just looking to see how we correct down into it. If we take out the 50%, clearly we can go lower. So let's watch it. At least this is, as long as we're below 108, we're definitely on the short side and
Yeah,
not the long
it
side.
looks to be moving now that we're below 108.
Yep. Yep. Let's take a look at the weekly euro. Here's that big grand triangle
Yeah,
that's happening.
if we bust that, it'll really move.
And we will bust it.
Hmm.
and
Eventually, for
it
sure.
will really move.
Yeah.
And we're not too far. Let's just see what happens here. It looks, yeah, it looks a little weak in the legs. And
Hmm.
we really couldn't hold about the 108. And if we take out this lower triangle, I think, there's a lot more to go. And if we take that out this time, I think we'll take out the low we had back in back in October and probably go out to test the 50%. So that's what it looks
Mhm.
like.
Mhm.
Yeah, that's all I got. 108. Yeah, I don't have much more to that.
Okay.
Let's get back into natural gas. Are you covering natural gas? No?
No, I think we made our move and now we're going to correct a little bit.
Yeah,
So
yeah.
still bullish, just think
Mhm.
we're going to pull back a little bit here or
That's perfect.
consolidate.
We made an entire quarter square move up, and little correction wouldn't hurt. Actually, be
Hmm.
kind of healthy, right?
Hmm.
So let it finish up. Hang Seng is hanging around the 108.54 level, which is really 108, 180.54 level.
Hmm.
And we talked about it, coming down, if we can hold above sort of 17,760, it'll still be in a very strong position. And we're getting awfully close to that, a little bit too close. Let's see what
Yeah.
happens. So I think long as we hold above that, it's still in a very strong position. And the next support level below that, under that, would be around 17,200. So that's what's happening there. If you notice, we 50% was the resistance. You can see how we rallied up into that and bounced. That's where it finished up. So it
Hmm.
looks like the square is looking pretty good. So that's what I have for that. That's all I got. Let me put it back to you. Well, Ben, we got to your 180.
Yeah, we got to the 180 early, huh?
There you go.
Now what is the question, right?
If it's not 180, it's another 180.
Yeah.
So,
Yeah. So as Barry said, this week we've pushed up through this full square, the 270. You can
mhm,
see it right there, the 270. We pushed up through that, and now we're heading up to the half square. And the half square here is at a little over 20,000. So that would be the next target. The one by one that we were looking at before is, now this is a 8 by 1 basically, as steeply as we've moved up this
mhm.
week.
Yeah.
So the key levels are now if we pull back below here, we could still do that and be okay because we have this structural support here, and then you have the half square. The half square would really be the one that I would be worried about, which is call it 18,630.
Mhm,
That would be where on a daily basis we'd look for trouble. From a timing standpoint, 54 and 180 are the same. 180 from the October low, 54 from the April low, both get us to 4th of July.
It's a pretty good count.
Yeah. And that early to mid July period, man, I'm starting to see a lot of hits and a lot of cycles in that area. So
Mhm,
it's beginning to, coalesce around that's going to be the next really important time frame to watch.
mhm.
But here's your daily. Let's jump over to the weekly or show you something here. So this is a nice little weekly Gartley that
Perfect, Gartley. Yeah.
we are in the target box. And so I always consider this like with the lines as well. It's like a decision point, right? Are we going to
Yeah.
continue on and just invalidate this, or do we roll over and have that be a significant point?
Mhm.
Coincidentally, we're not far from the half square here, which is 20,100. Just like on the other one, we had 20,080. So that this 20,100, 20,060, 20,080 area looks like it's fairly important,
Mhm.
or at least giving us another decision point where we're gonna decide which way we're gonna go. The other thing to look at is from the so far the bear market low of October 22. We take 90 weeks, puts us to the week of July 7th.
Mhm.
Again, it's another hit uh, in that early July period, early to mid July, that we are going to have some cycles coming in at that time that we have to be aware of. So I really like this weekly structure and the weekly mode here. It almost looks like if you look at this week's bar, it looks like you know we're either beginning the blow off or ending a blow off. We're
Mm.
gonna see which one. I think since the time hits are 2, 3 weeks away, maybe we got to run in them. I don't know. We'll have to watch and see how price goes. Anything you want to add on the weekly looking here?
Well, it just looks pretty strong. We got about that 90, so we have to respect that. Let's just go
Mhm.
with it.
Yeah,
Let's see. Let's see. We might be going for September highs, October lows, the normal pattern, So
that's true too.
so a lot of things. But long as we stay with the levels and the squares, I think we'll be okay.
Yep, absolutely. The timing, just because the timing comes in, and I hope you've picked that up over the weeks, it doesn't mean, you change direction or you go against what the technicals tell you, because from experience, when you do that, it hurts. It
Mhm.
almost always hurts you when you do that. Let's look at the monthly now. So here's the monthly. Obviously, we got a strong bar here this month. We've got some time to go to close. Before that bar closes, what I wanted to focus on here was the time counts.
Mhm.
Um, 22 weeks or 22 months, sorry, from the September 22 lows puts us in the month of August. We've got two timings for July. The COVID lows will be 52 months in July.
Mm.
And if we go back to the lows, the last time Trump was elected in 16, got 101 count,
Mm.
101 months. And then the big one from '02, 260 months is this month.
Wow.
So again, these things could mean nothing, but it's important to know that they exist, and then you watch the price action when you arrive at those counts and see if it substantiates a turn, or like we've seen, when on Barry's analysis with the 144, sometimes we just get a reaction and then keep going.
Yeah, exactly.
But price and the technicals, keep us out of trouble. It's something to note and something to be aware of, so that if the turn happens, you're not blindsided by it.
Mhm.
Anything to add here on the monthly?
No, we're good. Let's watch it. Let's watch the levels and go with the trend.
Go with the trend. All right, let's go. Let's jump over to Bitcoin. I think the weakness has been surprising some people, this week.
Hmm.
Given the channel that we have, I wasn't very surprised. It looks as if we're still bouncing in this channel.
Hmm.
If we started first hit here, second hit there, third hit there, fourth hit there. The key level for the bulls is this half square. Get above this, 67.8 area, and then we're pushing again and to hopefully break out of here for the bulls and get to the full square, which would be new all-time highs, around 73, 74,000. If we lose the full square down here, which is around 62, then we could be in some trouble. We
Mm.
just have to watch it and see. But the way I look at it, this is just a high level consolidation.
Yeah.
It's digesting this move. This is near all time highs, and we're just sort of a lot like gold and a lot like silver and these other copper, these other commodities that have had good runs. They're just sort of shaking people out and digesting that first move,
Hmm.
getting ready for the next one. Any views on Bitcoin that are different than that?
Well, it's consolidation. If it was a stock, I would almost think it's distribution, but it makes sense that it's building up a value level up there after the breakout above that 60,
Hmm.
above 60,000.
Yeah.
Yeah.
So if you're going to trade it, you got to play the extremes of this consolidation. If you're holding long, I think you treat it like gold and just let the consolidation play out and wait for the next move higher,
Mhm.
because it does look bullish. On the commodity front, let's switch over to commodities. As Barry was saying, his spidey sense was, when we were talking before the show, his spidey sense was sort of tingling, and things aren't exactly the way they seem. If you look at the commodities,
Mm-hmm.
it sort of fits with what you're saying, right? There's been major corrections, and we saw the metals have a great run, and everything else is in some kind of process of correcting or pulling back off of an initial move. It's not really trending, and it's not giving you these massive bull moves yet, like we saw in gold, like we saw in silver, and like we saw in cocoa. So it's not kind of in sync with a risk on environment. And the other thing, which gives me some pause is the action in bonds and the action in the dollar is generally acting on like a risk off type of move,
Mm-hmm.
right? Because money's flowing into bonds, money's flowing into the dollar. And usually when we've been ripping in a bull market, the opposite is true. Money's leaving bonds, going into the equities, or money's leaving the dollar and going into foreign currencies. So it's these kind of cross currents that we watch. They don't dictate, strategy, but you put them in the back of your mind and you watch the levels and you make certain that structure's good and we're holding the proper levels. But the cross currents I think we're seeing are showing up in the commodities. The grains still correcting off the moves they made. Do believe that lows are in place, but for these correction lows, we don't have those yet. So we're going to need a little more time there. The metals, berry covered gold and copper, silver's, very similar to gold, still correcting, still pulling back, waiting for you know, that base to be set for the next move higher. Nat gas, very briefly covered it. I think this initial move up is done. Now we're into this sort of first major pullback. We want to see, where it goes, what levels it can hold. I do believe it's bullish. I think the lows are in. We just need to see where we end up and sort of get that momentum flip to the upside again to get involved. On the softs, cotton still correcting, coffee still correcting. The one I do want to talk about
Mm-hmm.
is sugar. Sugar's been in a correction for a while now,
Mm-hmm.
and we've started to see some very uh, positive moves off of the lows here that make me think the lows are in and we could have a decent move higher in sugar. So here's your daily. We had a hell of a run last year into these November, December highs. Sharp sell off that I believe ended here in early May, mid May, at May 16th lows. Since then, we've had a move up, got stuck at the half square, couldn't get above it, pulled back, gave us a higher low. And then the last few days, we've had this reversal and we got to close over this half square
Mm-hmm.
on a daily basis today. That to me is telltale sign of okay, something has shifted. Like you knew the balance was to the downside here, and now we've got like a very nice move after a sustained move down with a higher low and a higher high, and we cleared a half square.
Mm-hmm.
So this is one I think we want to get involved in, and when you see the weekly and the monthly, you'll see why they're kind of turning as well and giving decent support. The holding this half square, which is around 19, what is it, 1925 area, 1935, right near where we closed, 1937,
Mm-hmm.
uh, opens up the full square, which is around 21 and a quarter. And that'll be the next important test because you can see it'll have this overhead to deal with here. But that's the daily. You want to comment on the daily? You want to look at the weekly, monthly first?
No, you covered it well. Let's look at the weekly, monthly.
Okay. So here's your weekly. Now, what's interesting to me about this weekly is we made the low. It was 27 weeks high to low.
Mm-hmm.
put in two inside bars, and then we've had two strong weekly up bars. So we're pushing nicely off the low, after 2 weeks of indecision at these lows. Like we couldn't make new lows, and it tried for 2 weeks, couldn't make new lows. And the other thing that I would notice, which is what I want to talk about from the bigger picture, is we made a higher low since the low we saw in 22.
Mm-hmm.
And that, to me, when you see the monthly, you'll see why that's important. So we came into this area of previous support, previous highs, made a higher low than the low before the big push we had up into last November's highs. So keep this in mind when we flip over to the monthly now. So what I want to show you on the monthly is the COVID low here, and then we made the high late last year in 23. If you see, we went up one, two squares, right? In this case, we went up two full squares. Notice what the pullback is. It's one square.
One square. Yep.
So it's 50% of the up move, which is pretty standard sort of Gann expectations when you're doing a bullish move. Is 50 at the 50% line, you can expect, some sort of action if it's a bull market. Well, given the month, given the daily, given the weekly that I showed you, if we can get a monthly up bar here before this month is out, that's a really strong sign that, okay, the first leg was here. This was a bull market correction, and then the next leg is starting. From a bigger picture standpoint, you can see, this is where there was some congestion before, so we found support in there. We're above all this stuff from 2017 to 21. Other than that deviation, you can see this is an area where it was kind of like almost a balance point between the highs and the lows we've seen in this thing. So
Mm-hmm.
holding this area here, let's call it 1860, 1850, is really key to this bull story. But so far, we're working on the inside bar. I'd love to see an upside, an up
Yeah.
bar this month. That'll
Mm-hmm.
that'll confirm to me that, okay, the one square, one full square, 50% correction is over. And that's why I think it's time to pay attention to sugar again. What do you see when you look at the sugar?
I think exactly the same thing. If you look at the long term, you can see the support setting up. It came down to support. Looks like we have the timing in place.
Whoops.
And now it's just, yeah, I'll wait.
There, go ahead.
Looks like the timing's in place. And now it's just a matter of picking and choosing your points
Yeah.
to trade it. Yeah.
And I like that. I really like that this 50% line on the monthly basis of 50% of that first swing up off the low um, is getting a reaction. I
Mm.
think it's a good early warning sign, putting together with the daily and the weekly. You can sort of get involved early in this sort of thing with a good risk reward ratio, and we'll see how it plays out. All right, the only other one I'm going to cover, and we only have to cover it briefly because you covered it in the main section, is crude. I think crude has all week. What's really interesting to me with this harmonic balance point, we held the half square, rallied up, and we've been for 3 days now been battling with this harmonic balance point, and it looks like we're going to close just under it, um, for the end of the week. But this level, and you identified it, it's in the 80-83 range, is really key because you can see the battle that happened over here for the entire month of May. If we can get above that and sit, this thing can really run. I know nobody cares about crude now. Everybody wants to short it. Everybody's like, oh, forget about crude. There's no demand because the economy's collapsing. I think the charts are telling us a different story, that
Mhm.
that and maybe it's, geopolitical or war related or something, that there's going to be some kind of supply issues because this thing really looks like it wants to move and move a lot. And as you can see, we've been going sideways for a while.
Mhm.
And once that breaks, all this energy is going to be released, and we should see a pretty sizable move to the upside, I think, in crude. Let's look at the weekly. There's the weekly triangle. It's a big, you know, year and a
Solid, yeah.
half. Yeah, big triangle. I mean, let's just look at the standard measurement. What's the size of the triangle? Say 95 to 68. That's 27 points. We break out somewhere in here, it's over $100 crude,
Mm.
$110 crude. The energy's there. High to low, we did 60, right? 60 weeks. That's a good low. That's a good low number in terms of a cycle. And now we had the first push, and now that this triangle's going. The question, I think the unknown thing is, okay, we're winding up. When are we going to break it? We don't know that yet.
Mm.
We'll have to see. Lastly, let's jump into the monthly. There's another view of the big triangle. Now, why do I like this view of the triangle and why is it important? Look at where it's happening. It's on top of
Mm.
this,
Right.
which again is, here's another move, just like we were talking about. We did two full squares up and one square back
Mm-hmm.
at the low. So it's a balance point and it's triangulating, building up energy in a bullish manner. If you don't believe it, go back and look at your gold chart and look at the triangle, look at the consolidation that happened prior to the breakout this year. It was a bullish one. It was sitting on top of bullish structure at old highs. And when it resolved forcefully to the upside. I
Mm-hmm.
think the same sort of thing is setting up here in crude. And the monthly gives you a nice sort of big picture shot of that. I know you covered the daily, weekly. Any comments on the monthly here?
Look, I think when it gets close to a pattern like this, and you have to really start watching the daily and start taking those trades when they get triggered, because you can't chase these when these things break out.
No.
You just can't. It's very difficult. Let's just say that.
And usually not very profitable. The that's all I got for the commodities. As you can see, as I detailed, a lot of them are correcting, pulling back, finishing, sort of these consolidations. So as they cycle through that process, I'll make sure we bring them to your attention on the show as they're sort of on a daily basis. They're ready to go. Barry, the interesting topic out for our sort of shop talk today that I wanted to discuss was because I think it's not only important, it's something you never arrive, like you never get it done perfectly and you're okay, I'm good, I don't need to work on that.
Mhm.
It's an ongoing process for veteran traders, rookie traders, any kind of trader, and that's managing trades and when to take profits and how to set stop losses and things like that. I'm gonna send the screen over to you because I think it's a really important subject and not a lot of people talk about it.
Can you see that?
Yeah, yep, I see the E-mini.
So the question is about profit taking. And I mean, the question is old as trading. So
Right.
I'm just trying to think of, every time the topic comes up, it's such a, I mean, there's so many variables, when it comes to the type of trade, the length of the trade, the time frame, the type of trader, their focus and their size of the account. So there's a ton of variables in there. But I think in general,
Yeah, we'll talk in
yeah,
generalities.
in general, I mean, the part we can focus on, I think if this part can be grasped, right, the rest of it can fall into place automatically. And it's about being able to be disciplined in profit taking as much as you're disciplined in putting the trade on and putting the stops on,
Mhm.
right? And the discipline on the upside is the one thing the thing I'm going to talk about is what I do, which is what I learned from Mark Douglas. He talks about, it's not exactly what he's saying, but it's something along those same lines. And that's to always, cover your cover your risk as soon as you can. That's the main thing.
And let's explain what that means. When he says cover your risk, he means from your entry to your stop loss is a certain amount of points. And what you're
Exactly.
saying is when you have an opportunity because the trade has become profitable, take out enough money, enough profit to cover being stopped out if the trade didn't work properly.
Exactly. That's exactly what it is. But that's a little tricky. It sounds easy when you say it. It's
Right.
just that you have your entry point, and then let's say your risk is $1 and the market moves $2, right? Now at this point, you have the option, you can definitely cover your risk, which was just $1. And if you cover it at $2, what happens then? Well, if it pulls back buck 25, you're stopped out of the trade. You didn't lose anything, but you stopped out, right? If you wait till it went to $3 and you cover your risk by moving your stop up to entry, let's say, that's what I meant earlier.
Mhm.
If you did that and it pulls buck 25, pull back, no problem. You still have 75 cents left. So it really comes down to where do when do you choose to cover your risk, and how do you pull up your stops as the move continues. And these are, sort of things once you establish, like, I want to do this always, and then it's a sort of an individual thing to develop the rest of it. So the first thing is to figure out it can be done in two ways, right? There's two ways to limit it. One is to move your stop up so you have break even as soon as you can. And the second point would be where you can cover your risk and still have a position in the trade. So if you're risking $1, first you move it up to break even. Okay, now no matter what happens, you have a free trade. Next point is it market moves high enough where you can cover your risk. So if you get stopped out at that point, at least you covered the risk for the next one. Does that make sense?
Yeah. In other words, one of the things you and I talk about is, scaling, right? Let's say you're risking $2 on a trade, the market moves $4 in your favor, you sell half, and
Mm-hmm.
you've covered your original risk.
Well, see, there's another twist in that. That is, you cover half, and you can pull up. You can pull up your stop now,
Hmm.
right? That's what you can do. So there's lots of ways to sort of split that up. Either you're going to cover all the risk, you can cover partial risk, you can just move your stop up without taking any profits. And so these are the places. How do you manage all that? So I think a lot of it has to do with the system that you're using, and when it's time to cover your risk. And sometimes, in this sort of the markets that we get lately, if it's really volatile, and we're not talking about this long term, staying in these long term trends like in the commodities, you might have to cover everything when it gets to some target,
Hmm.
right? So you have to be flexible in that way. So I think the bottom line should be, you should have the baseline somewhere. Well, what is it? Is it taking profit or covering your risk? So I think covering your risk, if you can always cover something, even if you cover half of your risk, well, that's something, right? And
Right.
what you never want to do is increase your risk once you get in the quarter.
Right. Right. Right.
So, so I think a normal thing what to do would be to just pull up your stops soon as it's in a range where it's not going to pull back further than that. So that's
Hmm.
how, like, squares come in handy. We look at the 1/3 lines, or 1/8 lines. So when you look at those here, let me give you an example. And it doesn't always have to be like this, but so the 8 lines here, um, one of the things is once it gets past the 8, you want to see, like, what does a normal pullback look like in whatever market that you're trading.
Hmm.
Like here, you
It's a
see
quarter.
it's a
Hmm.
quarter, right?
Hmm.
Now, before that, it was less than an 8 because the market was running really hard. When the
Hmm.
market's really strong, the consolidations are tighter. So here, it's a quarter. And then you look at here, it's another quarter, almost a quarter, right? Then you have an eighth, quarter, quarter here. You see how they're just like around the clock, right? It's quarter or
Hmm.
8. That's basically what
Hmm.
happens.
Hmm.
So once you get into a trade, let's say you catch this breakout, to the upside, then you want to wait till it moves up a little bit more than a quarter, because a quarter pullback would be a normal correction, whatever time frame, however you figure out the squares. I mean, we're using the squares as our reference because that's what we do. But you guys can come up with other ways. You can do any kind of a pullback. You can do Fibonacci. You can do retracements. So the idea is to let the market go. Once the market starts running, you want to be below whatever the normal correction is, so you can stay in it for the long haul. So in this case, if you're below a quarter of a square, then you'll be down in here somewhere, right?
That's a great way to put some stops in. Yep.
Yeah, for the long haul, right? Not the even in the short term, you can do that. Like a 4-minute, we can look at lots of examples of how to do that.
Sure.
And once that reverses starts moving and it takes out that quarter level, then you can move your stops back up again. And once it takes off again, like right now, the way the S&P looks, we can see if we don't go any higher, a normal correction can come down into let's say 54, 54.18, 54.20, right into that range, right?
That would be an eighth, right?
That would be an eighth. That would be about an eighth. Now, if it's a deeper correction, it can get all the way down into 43, 53, 48. And that would be sort of the normal correction that we've been having. Like the one we had here. Like here, it was it's a little bit more than half a square. So I don't look at that as that's sort of a bigger correction. I don't think you want to be in there for that long. Right. And the reason you wouldn't is because you had a pretty good square. Anytime you have a good square that lines up, it's better to just pack it up and wait for the correction to finish and get back in.
Right.
That's the idea. But once these corrections coming, like the 50%, and when you get up to these key levels, you can take profits and you wait for the next setup to happen. And we talked about this before. When we start using the squares, you can use the key levels to sort of, enter trades and exit trades.
And take profits, yeah, for sure.
And take profits in that way. So here, if you're trailing something in sort of the short term, it should be like 54, below 54.12. And now that doesn't mean you don't have triggers and flags to get out if you have to,
Right.
But if you're in the long term, that's what you want to do. But at the same time, you have your stops at break even, so it's not a problem.
And if we get to 55, 66, you let some go, right? You take some profit. Right.
Well, because we know, usually the reason we do that is we know when it gets to a half or full square, we can expect it to correct or consolidate, do something where it gets another chance to get in if it's going to continue. Like in this case, we got up here, and let's say you covered some, you didn't wait for that. Well, you got a chance here. It pulled back, it corrected, and then it moved. You got another pullback. So it's a bit of an art, and each leg you have to analyze, with your sort of the goal in mind and looking at the higher time frames and, all of these things. But in short, I would say the two things that we just talked about, just to recap, is you want to look at ways to, move your stops to break even or limit your risk in some way. Sometimes you don't have to, if the market takes off all of a sudden, you don't have to move the stop to break even, give it the room, but maybe you can cover 1/3 of your position. That'll cover your risk, or half. So if it comes back, you have that extra cushion to hold you, and you'll still break even. The other break even is to actually move your stop up to the entry, and then of course, or a little bit above the entry to cover your cost. So that's sort of a break even trade, right?
Sure.
And everything else above that is about, when do I cover some, and when do I move my stops? Well, to do that, look at the market that you're trading and look at the
squares to give you the spots.
You can look at the squares or look at the recent moves and look at the corrections. How deep are the corrections happening? Like here, we know, the reason we use these squares is because the pullbacks and corrections, everything kind of fits within the square. It'll be an eighth or a half, or like this correction, the bigger correction was a half a square. So we know when it gets to here, well, you probably don't want to be short once you hit one of these levels. That's the whole point.
Sure.
And once you get above those things, that's when you start trailing again. You get reset up. So the only thing is in this game, the deeper the pockets, the easier it is because the more positions you can put on, the more flexibility you have to peel them off and move them around.
Scale in and out. Yep.
Scaling, exactly, scaling in and out. So I
Mhm.
think, when you're new, it's really difficult to get into that position. I mean, you got to do at least five, I think, to really make it all work.
Right.
Unless you have a good startup trend, three can do. Three is like the minimum, but I think five lets you breathe a little bit
Hmm.
and not be stressed out. What else can I put? Let's talk
No,
about.
listen, I think this is a good introduction to the topic. As you said, we could talk for hours on this, and we'll bring it up in the shop talk section again, and we'll talk about different aspects. The important thing is
And we
to
can talk about,
manage,
yeah. Go
yeah,
ahead.
to manage risk and to use, the levels on the squares as spots to get in or out, you know?
And learn about the markets that you trade and to see what the measured moves are. How does it
Mhm.
move? Does
How
it
does it
move in
move?
12
That's
points
right.
at a time? Is it 14? Is it 28?
Hmm.
What is it, right? That's where the squares come in. That's the foundation of squares is to measure how the markets are moving
Right.
and what kind of impulse, how big is an impulse? Is it 90 degrees? Is it 74, 72? I mean, here you can see the second part of this leg. Once we broke out, we corrected. This was straight shot 72 degrees, right? Straight, boom.
Hmm.
Now, when a straight line like that gets to 72 and it stalls around a little bit, well, that's the place to really, like we talked about earlier, to cover your butt and then to look at what happens next.
See what happens next. Yep.
But the first thing, primary thing is always, I mean, this is the biggest thing I learned from Mark Douglas is you want to cover your risk because if you don't do that, nothing else really matters because,
If you don't have capital, you're not in the game.
you're not in the game and you don't want the psychologicals of the trauma of getting stopped out like that.
Right.
If it's on the table, you don't want to let it get away just because you forgot to do something.
Sure.
You didn't cover your risk. So I think that's a good foundation. Is always, if you're going to go into battle, cover your risk first. you know,
Well, let's leave it there, Barry, because I think that's great advice, and we'll leave it with cover your risk is the most important aspect of this. So, listen, everybody, we appreciate your support. Please make sure you like the videos and ring the bell and subscribe to the channel. We're trying to grow the channel this year, and we appreciate your support. Barry, great job on the show, and we'll talk to everyone next week.
Thanks, Ben. Good job. We'll see you next week.
All righty, take care.
Bye, everybody.
Bye bye.